Welcome to the Greener Way podcast, a show about people, planet, and purpose, and how investors and corporate leaders push forward in a complex world. Simon O'Connor is the CEO of the Responsible Investment Association Australasia, an industry body that champions responsible investing and a sustainable financial system in Australia and Aotearoa, New Zealand. Simon, welcome to the Greener Way, and let's talk about what's going on for your more than 300-strong membership body. It feels like 2022 was the busiest year yet for responsible investment and sustainable finance, but 2023 feels like it's going to be even bigger. What stood out from you from last year?
Hi, Rachel, and thanks for having me. I think we all are still recovering from 2022, and I think it was a global phenomenon, actually, this really enormous wave that really sort of crossed the globe in sustainable finance and responsible investment. And it sort of built on this momentum that's been coming over the last 5 years or more, but really hit a kind of a threshold point last year. And I think we saw that in a number of ways. So, we saw governments and regulators globally just sharpen their focus right onto this sector. And that played out around the world and absolutely in our market, and particularly around the concept of greenwashing really became the focal point, whereby it had finally been realised that this is a sector that the majority of the financial system and services sector are focused on. So regulators better get on board and ensure they are not misleading consumers, because we saw the demand piece there as well, really driving from the consumer side. So in the Australian context, we absolutely saw that. I think in our own domestic context, the change of government saw this political focus shift in our sector as well. And so all of a sudden, there was this really an opportunity to engage again with governments, with a new federal government who saw that actually to drive a strong, prosperous and thriving economy in Australia, we're going to need private finance to play a key role. And so that the penny dropped, not just in the finance sort of portfolio and treasury portfolio, but across environment, cultural heritage, infrastructure, housing. And so all of a sudden we saw this sort of appetite from government to kind of work with us, collaborate and partner, which was really positive. And I think finally, maybe as a third observation for 2022, we really saw capital starting to flow preferentially towards greener, more sustainable assets and away from the dirty, the polluting, the brown, the unsustainable assets. So I think, where that kind of cut through for us most, I guess, was just seeing this growth in the assets sitting under RIAA certified products jumped nearly 100% in that year, from about $65 billion in AUM to about 110 or so odd billion in AUM. So that was one measure where we just saw that shifting capital. After all those years of a lot of talk and a lot of work and a lot of commitments, I think the money has started to flow. And we know when the money starts to move, it sends a very loud message to the whole economy, businesses in the economy, governments in the economy. So that was sort of some reflections on that year, 2022.
Simon, I just want to drill in on one point you just mentioned there, because I think it's worth explaining to our listenership. So RIAA operates an independent certification process, the RIAA certification. Do you mind just giving a quick recap for our listeners as to what RIAA certification is and why so many financial services providers are embracing the RIAA certification process?
Yeah, it's really something that's become a key priority for us. And I guess what you see in many sectors is that when businesses start making claims about their ethical products or their environmental credentials, you very quickly see these third-party verifiers come into play to certify and assess those claims to ensure they're valid, they're good bona fides, that they're actually there's substance beneath them. And so RIAA has been doing this on financial services products, super fund products, managed funds, for about 15 years. But I think it's in the last 2 years where we've really seen this demand surge, where we're in a market now where most fund managers will have products that are ESG or responsible or impact or ethical. It's really now time that those products actually have that third-party verification that they are actually delivering on the claims they're making. And so we provide that service. We assess the products, we run them through a really high sort of due diligence assessment, verify that there are processes that can deliver on the claims being made, that the labelling is not misleading, and then we give them a certification that they can use for 2 years to sort of say, yep, we have actually met those standards. So this is become a really important focus for us, particularly in the context of greenwashing, where everyone is concerned that there are products in the market making claims that can't be substantiated. And our regulators here and in New Zealand are starting to take enforcement measures on that. So that program currently has about 320 odd products certified, banking products, super products, managed funds, ETFs, the works, KiwiSaver funds. And that's grown in the last year from about 220, 30 products to that amount.
I think it's really interesting, Simon. I usually try and interview whenever RIA makes an announcement of certification, or the entity makes an announcement that they're certified. I try and arrange for an interview. And I always find it interesting that the most common answer I get is that the process forces even more self-reflection and sort of holistic thinking within the entity about how they do the process of responsible investing. As someone who's really loves a good process story, it always makes me really excited to have those kind of conversations about the industry.
Yeah, and I think we make it really hard. And we intentionally make it really hard. That is our plan.
I think you're
80%
succeeding.
or more of most of the products going through get told to go and make changes and have to make amendments to their PDSs, have to clarify the way they talk about things, have to improve their exclusionary thresholds. And I think it's really healthy for our industry to be stepping up and maturing, and it's necessary. And the managers keep coming back and bringing their products, which is great. But it's not our intention to make this an easy process for them. And we hope, and we see as well that feedback that people see it as really valuable in improving how they're doing things, their systems, their processes, and their disclosures.
So, Simon, what are the key priorities for 2023? Obviously, more of the same, but are there areas for either RIA itself or for the that's being reflected up from the membership up to you folks as to what's going to be important on the agenda?
Yeah, so we see that over this coming year again, there's going to be this huge ongoing momentum and focus on the policy and regulatory environment around our sector. There is basically regulators have fallen behind the industry in our sector, and they're now playing catch up. And so we anticipate that our regulators in Australia and New Zealand, our governments, are going to continue to be pushing through legislation, regulations, monitoring, enforcing. We're seeing that already with climate disclosures in Australia, consulting commitments from the Treasurer around a broader sustainable finance agenda. So that's going to be work that we are really focused squarely on to ensure when those things are being hardwired into standards and codes and regulations and policy that they're done right and at a sufficiently high standard. And so we'll continue on that really strongly. What the certification is a key piece in that. So that's a really big strategic priority for us, particularly to give consumers and advisors a lot of confidence in the products they're investing in. Because whilst we've seen this big growth and momentum, it's fragile. We can lose the trust that we've built by failing to deliver on the promises we're making, failing to deliver what the public expect from responsible and ethical and impact investments. And so we kind of feel like we're a bit of a holder of that good trust that has been built up by the sector. So they're kind of really the capability and practical sides of delivering on our industry. I think on the issues themselves, our members are going to continue to be focused really strongly on cultural heritage and First Nations people's rights. And there's some really good work going on there that will be launching in the first quarter of this year with some First Nations Aboriginal representative groups, with some corporate groups and with investors around that, which is exciting. Climate disclosures work is going to force a big stepping up in terms of the data that's available, in terms of the way companies and investors have to sort of be accountable to their climate exposures, how they're managing them. And I think nature and biodiversity, the momentum around this just continues to grow. So that's one area we've spent a lot of time on with our members, but we're learning from an earlier sort of starting point, I guess, the steeper learning curve for us. So we continue to sort of help on that front. I think the other thing I'd say for this year, we're at a point where the market is feeling quite overwhelmed by the amount that's going on and the amount that's needing to be sort of stepped up and improved and learned and systematized and embedded in a very short window of time. And so, we see our role as providing that platform for that community to come together, to share, to build capability, to build a community, to actually help us actually be able to deliver on all of these demands on the sector right now. So, things like our conference that we hold annually that is a really key point in time of bringing that community together. So that's in the 10th and 11th of May this year in Melbourne, which will be a really big conference again, stepping up from last year, really important 2 days of that community coming together to share knowledge. And I think, and of course then very practically for us organisationally, we're a growing little organisation that aims to be a platform for a huge community of 500 plus investment organisation members. There's a big focus for RIAA on just how we run our organisation well, how we run our teams well, and how we continue to sort of really deliver well for our members as well. So there's a big organisational focus for us as well.
Yeah, that sort of brings me on to my next question, Simon, because it's something that I reflect back on in terms of the editorial mission of FS Sustainability. With so many of these issues becoming table stakes or business as usual through regulation, through social license to operate, that sort of thing, how does the responsible investment industry push sort of deeper and further into what that future of sustainable investing and sustainable finance looks like, without becoming a talking shop? Because there's always that risk as well, that we just sit around talking to each other instead of directing outwards.
Yeah, I think it's a really, really important point, and there's almost an expectation that we're experts on more issues than we ever possibly could be experts on. And we need to kind of admit that fact. We can't be experts on all of the ESG and sustainability issues that we kind of need to be considering. And so I think it does become a time where we need to be really smart at our collaborations and partnerships and how we actually operate in a very different way to having good partnerships with experts in different areas and working out how to work really well with them. I mean, very practically for us, we primarily are seeing this flow through in our own working groups that we convene of our members. We've seen hundreds of our members sitting around the table and sharing the knowledge they have in a very incredibly open and honest and generous way around the issues of human rights and modern slavery and nature and biodiversity and First Nations cultural heritage, and then kind of trying to, kind of crowd source a lot of that knowledge, compile it into sort of really useful guides that can help and arm our members to then better sort of engage on these topics, because there is more than any of us solely can kind of be across. And so I think we need to learn how to do partnerships and knowledge sharing really well, and it's very much a focus on us. How do we provide that platform for that? And pleasingly, we are in a community who collaborate well, who share well, who are very generous. And so I guess that's critical for all of us who are individually practitioners in this field. There's a lot of people out there with a very, very unrealistic sort of list of work priorities, I guess, and are going to need to find those colleagues they can work with and collaborate with.
Yeah, I do think this industry tends to be very much a yes and sort of approach, which is pleasing, but you can get in over your head very quickly. I'm laughing along in empathy at the more ideas than we'll ever have a chance to cover idea. I feel that.
Absolutely. I think there's lots of us doing our planning for the calendar year 23 right now, saying, what are we not going to do? Are we just going to have to say we know it's important, we just cannot possibly do that this year. And so I think there's some of the harder decisions too, because as we know as well, there's a lot of scrutiny on our sector. There's a lot of expectations. There's a lot of civil society groups who would love us to be more active on a lot of issues and have a very good case as to why responsible investors should be considering certain issues. But there is a simple capacity constraint issue here as well. So doing fewer things well may be the mantra of a few organisations, I think.
Well, since we've already name-checked climate change, biodiversity, First Nations and cultural heritage protection, and sort of racial justice and equity, what are the other three issues or key issues that you're looking to with 2023? I always look to RIAA as being at that real crest of the wave when it comes to identifying the issues, the legislation, the regulation that are going to shape the agenda.
Well, thank you, Rachel. That's nice of you. I think we're at this point in time where we have to be really careful that we continue to build the capability in our market to deal with the issues that have been thrown at our market. And so a lot of us, it'll be not so much about adding new issues, but building that capability to deal with those current issues. So as we said earlier, there's this huge sense of being overwhelmed and stretched, and we need to sort of consolidate that. And so there's a big learning curve that we need to support. And what we know as well right now is there's a huge skills and staffing shortage of experts in this field as well. So we need to sort of play a role in sort of helping to build that capacity, capability, that next wave of skilled experts who can fill roles. So that's really key. I think a big focus will again be just that opportunity we find ourselves in right now to create change. Like, there is clearly a window of opportunity that is live right now that we need to make the most of it. The political opportunity is part of that. The momentum we're seeing globally is a big part of that. And so we kind of need to continue to push on that window whilst it's there, make hay while the sun shines, and really progress that. I guess the flip side of that is, we're observing that there is a pushback going on globally right now, and there's a need also to defend progress that has been made, and really, really consciously ensure we have really good foundations upon which to continue to proceed. And so whether that's sort of US pushback, whether that's the concerns around greenwashing, there's a lot of areas where I think we just need to tread really cautiously and ensure we have our foundations really solid. So that's going to be a huge piece of it as well. But and I think, like I said earlier, there's been this massive momentum and growth, but that's risk's been fragile. We actually have to consolidate behind that and deliver on those promises and deliver what consumers are expecting. And so I think what we want to see is, I may have gone beyond my top three issues. Sorry if I have there, but I think
again, endemic to the industry, we're always yes-anding here, Simon.
Yeah, that's right. So if I have number 4, it would be that I think continuing for us is this really strength and focus around stewardship and the power of ownership, and how we really responsibly own the assets in our portfolio. And this applies to any asset class, any type of investor. I think that concept of what we're doing through ownership, as opposed to just what we're avoiding in our portfolios, is really that is sort of the influence we have that has the potential to create greater change than any other sort of tool or activity in responsible investment. So we will continue to be pushing really strongly on stewardship, how we use engagement, how we use policy advocacy, how we use voting, etc., as a really strong part of the toolkit for responsible investors this year.
Excellent. Well, Simon O'Connor, CEO of Responsible Investment Association Australasia, thank you so much for your time.
Thanks for having me, Rachel.
Pleasure. Thanks for listening to the Greener Way podcast. If you liked today's show, remember to rate and review us on your podcast platform, and make sure you're subscribed so you don't miss an episode. Any feedback? Contact us on podcast@fssustainability.com.au. I'm Rachel Allen-Backus.
The Greener Way podcast is a product of FS Sustainability, a show about people, the planet, and investing in our collective future. All information in this podcast is for education and entertainment purposes only. The Greener Way podcast gives listeners access to information and educational content provided by discussing numerous financial sustainable options and our featured guests. It is not intended as a substitute for professional, legal, or tax advice. The hosts of The Greener Way are not financial professionals and are not aware of your personal financial circumstances. FS Sustainability operates under an Australian Financial Service License and the exemption made available under the Corporations Act 2001 in respect to any information or advice given. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. For more information, head to the disclaimer page on the FS Sustainability website, fssustainability.com.au.